The Edmonton Arts Council acknowledges the traditional land on which Edmonton and Wisquechee Waskahegan sits, the territory of the Treaty 6 First Nations and homelands of the Métis people. We would like to recognize and thank the diverse Indigenous peoples whose ancestors' footsteps have marked this territory for centuries, such as the Nahewa Cree, Dene Sulene, Nakota Sioux, Saulteaux, Niitsitapi Blackfoot, as well as the Métis and Inuit peoples. It is a welcoming place for all peoples who come from around the world to share Edmonton as a home. Together, we call upon all of our collective honored traditions and spirits to work in building a great city for today and for future generations. We very much appreciate you joining us this evening. We know that sometimes financial planning is not the reason why people became artists in the first place, but it's essential for our ongoing ability to work and continue to make a living as artists. We appreciate you joining us here this evening. I will put in a plug. We do these sessions every couple of weeks. Next week, we've got a session coming up, especially for visual artists and craft artists. We focus on the packaging of work for a retail context once you're ready to start moving into the realm of print or reproducible work. We will have other sessions like this, free sessions coming up every couple of weeks. We encourage you to sign up for the Edmonton Arts Council's biweekly newsletter to get all the details. We are thrilled to have Janis Richards of J. Rich Business Services here this evening. Janis brings a rich and varied expertise working on all sides of the tax realm. This is, I think, our third or fourth session with Janis. She's just an extraordinary wealth of expertise, and we're thrilled to have her back. I'm going to turn it over to her now.
Hello, and thank you for inviting us. Just a minute, you'll need to turn yours off there. Sorry, Megan, we're in the same office, so I was getting a little feedback there. So thanks, David, for inviting us again. We really love to do these seminars, and hopefully it helps everybody. I'm just going to change my view here, David, I think. You said speaker? Oh, no, I see. Well, we've got some feedback going on here. I'm not sure if that's us.
Mine's off.
What's that? Yours off? Okay, I'm not sure. Well, we'll keep working on this because we had some feedback. Could you hear that, David?
Oh, we're getting a little feedback. I think it's taken care of now.
Oh, okay, hope so. Okay, we'll get started right away. Thank everyone for coming, and thank you, David, again, and thanks, Megan, for being such a great assistant. I couldn't do this without her. I really don't do well doing PowerPoints, and I mess up the formatting all the time. So thanks. So we're here today to talk about COVID benefits, and then we'll get into just regular, taxation and what you need to keep and what's deductible. We'll go through that again briefly because everybody likes to go over and over that. It's not something you remember. I'm probably the only one that has it deeply ingrained in my head because I'm working with it every single day. And so our outline, that's the one thing I can't see though, is I can't see the PowerPoint. Can you see it, Megan?
No, I don't think it's posted.
Do you have the PowerPoint posted, David?
I can do so. I was just waiting for your word.
Oh, okay, super. There we go. So the next page is the outline. We could go to the outline, David. There we go. So we're going to talk, you can see we're going to talk about a lot. We can't go super in depth. If you have a question, feel free to ask it on the sidebar, and Megan will definitely address it. If it's a big question, we'll save it to the very end. If it's something small, she will respond, or we'll deal with it if it's really something we feel that, oh dear, nobody knows what's going on here, right? If you've missed it, if you as an individual have missed it, probably the person next to you has missed the idea behind it too. I really wanted to go over scams briefly. That's the next page. Just a minute, yes? Oh, Oh.
someone just- Oh, there. I'm
Oh, you
sorry,
can.
I got it
Okay,
now.
she got it. She couldn't see the chat at first. Okay. Here's the thing: is that these scams are huge, and they always have been, but they're getting worse and worse and worse. So right now, you really got to ask yourself some questions. If you start getting text message, you wouldn't get a text message. You're going to get an email from CRA saying, you get this big refund. Go, did I ever sign up for my account or my business account? That's the only way you're ever going to get an email, because you're going to give CRA your email. They're going to say, you have information from us, and then you have to go to their site and go through my account or my business account. Another one that's a very big thing to notice is this person too aggressive or demanding? Because CRA is not allowed to do that. Some of them get a little feisty, but they're not that bad. But if they're demanding and you got to pay now and you're going to go to deal and all this stuff, say, I need your agent number, I need the area that you are located in, you hang up and you report this to CRA. You call them and say, this is the agent number they gave me. They said their agent number was 17254 PRA, which is Prairie Region. You report it to them, or you can call 1-800-O-Canada at the bottom and say, does this person exist? And they will tell you if they exist or not. And are you really expecting more money from CRA? Did you get a notice saying they reassessed you? If you didn't, too good to be true, it's not happening. Is the requester asking for information that they already have on file? Sometimes they need to verify who you are, but it's going to be certain information like line 11,500 of your 2020 tax return. They're not going to be asking you for your bank account information, because then that's a red flag too. And if they say, well, you owe all this money, why? If you had an audit done, you'd know. You would have gotten a letter from CRA, or you would have gotten through something through your email through my business account or my account. So, and then I was looking at some of the stuff today. Hang on here. There's fraudsters now because of COVID. They're posing as loan and financial service companies. They're offering loans, debt consolidation, and other services. Be really careful. Stick with the big 5 banks. Cleaning or heating companies are saying, oh, we'll do air duct cleaning. Center for Disease Control in the World Health Organization offering fake lists of COVID people infected in your area. Like, you really got to be on your toes. I have a list like you wouldn't believe. They're all on the CRA site. You even get door-to-door salespeople selling household decontamination services. Like, it's getting a little ridiculous when they start doing that. So we just want to let you know, be on your toes, because there's people out there trying to scam. And they really want personal information. They want your bank account number. They want your whole name. They want your mother's maiden name. And that's why when you go on Facebook, don't answer all those things and say, oh, so what's your mother's maiden name? Or what's your favorite this? Or what was your dog's first name? Those are all possible passwords. And they're fishing for information. So, okay, that's all we need to know about scams. Be on the lookout, please. So we're going to go into, I think we all know that the CERB is done, right? But those of you who haven't filed your 2020 tax return, be careful, because they sent you a T4A from CRA to report. And if you got it through EI, that's Service Canada, you're going to get, a T4E slip. And they will automatically be added to your tax return, because CRA has this information already. We have had a couple of people, well, Megan has had one, that they actually put the wrong amount on this T4A slip. So a T4A slip is like a T4 slip. And they amended it later. So this person got a notice that their return had been reassessed. And then we went in and went, oh, well, they messed up. Doesn't happen too often. They've usually got the amounts right, unless you did repayments or something like that. And also know that CRA only withheld 10% tax. If you were lucky enough to have a really boom year in 2020, you might find that you still owe a lot of tax, because it's based on your total income and the percentage of tax you're going to be paying on that total income, not just the CERB. CERB was to cover all the benefits. They closed it down September 26, 2020, and they brought in several other ones to take its place. So they brought in, they brought in the CRB. So that's the next slide, please. Okay, The CRB, some of you may have been getting it and some not, but if you have, it started September 27th, 2020. And here's the thing, it doesn't end till October 23rd, 2021. If you haven't been getting it, you can apply for any period of time that is less than 60 days in the past. So you're looking into August, somewhere in August that you can still apply for each 2-week period. It's sort of like EI, you have to do each 2-week period. It's not like the CERB, it was 4 weeks at a time. So to be eligible, there's all this eligibility criteria is on the CRA site and very well laid out. And I know everyone's a little bit afraid sometimes to look at the CRA site, but it's really nice because actually the way we printed it here is almost the way it's shown on the CRA site. So to be eligible, excuse me, I don't know what got me going here. You have to earn at least $5,000 in 2019, 2020, earn the 12 months prior to the date you apply. And this is why this is all going to be really fun to be audited if you get audited. Because they're setting all these parameters that are going to be very difficult to prove or not prove. And that $5,000 has to be, this is the one where it's going to be employment or self-employed income. And the self-employed income has to be net. For any of those that were in the previous seminars, we talked about, is it gross income before expenses or is it net income after expenses? Well, guess what? It's gross this time. So they get us, what's that? I mean, it's net, sorry. Thank you, Megan, she got me. CERB was gross. This is net after expenses. A lot of people in the arts maybe didn't make, they maybe made $6,000 after expenses, they had minus 1,000. You're not going to qualify right there. Unless you use the 2019, the 2020, or the 12 months before the date you apply. It gets a little tricky, so you can always phone in and go, hey, do I really qualify? You have to not be eligible for EI benefits, because if you are, you go to EI and get their benefit. You did not apply or receive the CRSB, here we go with all these acronyms, Canada Recovery Sickness Benefit, Canada Recovery Caregiving Benefit, Short-Term Disability, Employment, EI, and Quebec Parental Insurance Plan. You were not employed or self-employed. You were not employed or self-employed for reasons related to COVID, and you have a 50, oh boy, here we go, this 50% reduction in your average weekly income compared to the previous year. That's where it gets a little dicey. We will finish telling you some of the criteria, and I'm going to explain this 50% because we've had to dig quite a bit into it. So we'll go to the next slide and we'll finish this. And then I'm going to go back to what does this 50% really mean? So the CRB, we just briefly put up here what you're going to receive. It does decrease after July 18th, 2020, or after you've received a maximum of 27 periods. It doesn't give you a lot of money, but it gives you some, okay? And just remember, it's every 2-week period you're applying for. So if you did pretty good in July and August, and all of a sudden September, you're not at this 50% criteria. But the CRA will tell you how it's taxed, and then we'll go more into the 50% criteria. You're taxed with it again. These T4A slips have different box. Different box represents what type of it received. Uh-oh, is my internet connections unstable? Don't do that. Okay, sorry. I think we're good. Excuse me, let me know. And the CRA will send you this T4A slip, but it says if you make more than $38,000 in net income, so that's basically total income that does not include the CRB. So you take away the CRB and the rest of your income adds up to $40,000, then you're going to pay 50 cents on for every CRB dollar of income that is over the 38,000. You don't have to calculate it. Guess what? The nice little software programs that we run, they calculate how much you're going to have to pay back, which is good because it does get a little confusing, and it will automatically take out the CRB. So you don't have to worry about being taxed on that amount. The software does it for us. And the T4A slips, once they're put into the tax software as we use, it'll put it where it needs to go. So you don't have to worry about that either. Okay, all right, we're going to try and make this really simple. I'm going to try, Megan. Here we go. This 50% rule. So it says, You have to have had a 50% reduction in your average weekly income compared to the previous year due to COVID. So how do you figure this out? So let's say you earned net $5,000 in 2020. And you're going in 2021, oops, I'm not making any money. I need to apply for this. So if you made $5,000, you divide it by 52 weeks because we're looking at weekly income. Then you're going to divide it by 2 for 50% of that weekly income. And you're going to come up to the fact that weekly you made $48.07. Okay, that's what you're going to be comparing. What you just got a job at that you found at Tim Hortons for 2 weeks. Okay. And then Tim Hortons said, I'm going to pay you. No, we won't use employment income. That's a little confusing. We're going to use self-employed income. You got a gig somewhere. And they said, we'll pay you $400 for that 2-week period. So if you divided that 400 by 2, you got $200, which is way more, not less than the 48. However, here's the catch. And this is why this whole thing is so confusing. If you took the $400 you made minus expenses that would apply to self-employed income during that time, you would then have 0 income. And therefore, 0 is less than 48.07. And that's how complicated they have made it. And some people fall right through the cracks because they did not make at least 5,000 net. And if that's the case, you're never going to qualify. But get this. This is the people that need it. So I'm not sure who wrote this legislation. I'm not impressed with it because some of the hardest hit people are falling through the cracks and not able to get it. And this is how complicated it is. So if you're looking at applying or have applied, you're worried, or you get a letter saying, can you prove this time period? Really get consultation with a professional about this. And we'll help walk you through how to show CRA you made 50% less than you did at the same time last year. Is that about covered? Is that clear enough? Honestly, it took us a while to really dig into this. So after this seminar, if you'd like help, you go, oh, am I in trouble? Or if you ever get audited, give us a call. We'll give you a hand. We have no problem doing that. We're probably gonna have a lot of people. A lot. Okay, and the next slide. Are we getting any questions, Megan?
No.
Okay. Ooh, that's interesting. Good. For now, the CRSB, the Canada Recovery Sickness Benefit. We just want to let you know about it because it's still there till October 23rd. What happens after October 23rd? We haven't heard anything yet. There's no legislation being tabled at this time that we've heard. Who knows? It could happen tomorrow. It could happen in the middle of the night. We just don't know. So the basic idea behind this is that it's a sickness benefit to give you support when you're unable to work because you were sick and you need to isolate. You have to not be able to work at least 50% of your scheduled work week because you're self-isolating due to the fact you're sick with COVID or may have COVID, and you've been advised to self-isolate it. But here's the key. If you went and traveled abroad and had to quarantine because you made the choice to travel abroad, you can't claim this benefit. But after you quarantine, if you got sick, you can claim this benefit. And that's why I say these things are also complicated, and the rules are, there's a lot of rules. Every time you're dealing with each benefit, you want to go in and take a look. Does it apply to me? Get a good idea, and then consult with CRA. Their agents are pretty good, or a professional like myself or Megan, or whatever accountant you're going to right now. So here's the thing too, is that there's a 10% tax withheld. It goes on a T4A slip again. It's automatically populated onto your tax software, and the software knows where to put it and where to put the tax, but you could still wind up paying more tax if you made more money that year, that this 10% wasn't enough combined with your deductions from, let's say, an employment job, or maybe if you're self-employed, you have no deductions and it's still not enough, okay? And then the next one, we'll go to the next slide, David, is the CRCB. It's a Canada Recovery Caregiving Benefit. Basically, it's meant for people who have to stay at home if they were employed or self-employed, and you have to care for children under 12 or a family member who needs supervised care. And you can get this one for, how often is this one for? You can get it for Your household can receive 42 weeks. Yeah. 42 weeks. Like, this is a pretty good benefit if you had to stay at home. And doesn't mean you stayed at home and still got paid by your employer. That doesn't count. Because if your employer said you get to stay at home, you can't apply. But I know there are people who thought, well, I have to stay at home, so I get to apply. No, well, good try. So we're here again, and we've got all the dates it applies for. If you think you need to apply, you get to apply after the end of each period. They give you eligibility periods, and as soon as that period is up, you apply. It's kind of different. The other ones you're applying at the beginning of their eligibility period, not the end. But like I said, Cr's got good walkthrough steps. If you get stuck on one, write down your question, phone CRA, or you phone ourselves. We're here to help people. Each person that at the seminar gets a good 15 minutes free consultation, which usually doesn't take long. Okay, and the next one we're just going to go to, because I'm not sure if anybody here today this would affect them, but employers can get CEWS, Canada Emergency Wage Subsidy, to help bring people back to work and or keep them back on the payroll. Like, it's very, very it's to keep them on the payroll or to bring them back if they've been laid off employees, right? Now, this one is the most complicated I have seen yet. So it sounds really cute. The employer proves that they had a stated revenue drop each qualifying period, and they get a subsidy up to 75% of eligible remuneration, up to a maximum of $847 per employee. Well, that sounds really cute, but it's very, very complicated. We are not in this session going to go over this. I just want to let you know it's there. And or even if your employer goes, you know, I can't afford to pay you, say, have you looked at this? We got till October 23rd at this time. And there is a retroactive period too. The audits for these are coming out at 9-page letters, which I never want to see one of any of my clients. There's no way. I'm just going, no, I can't do this. So, okay, and the next one, just a brief overview, is the CERS, Canada Emergency Rent Subsidy. Same thing. Small businesses. You don't have to be incorporated to be a small business, but you had to pay rent or mortgage. A business rent or mortgage, not your personal, right? There's a subsidy available for that too. This one is also very, very complicated. And again, refer to the CRA site. Now, subsidies get added directly into income. These are not loans. A loan is different. That will be our next one. A subsidy, because you got money instead, because you didn't have the money for your payroll or your rent, you have to add it into income and pay tax. But you're in a much better position than not being able to pay rent or pay your employees to pay tax on these subsidies. Now, the next one, sorry, I'm just going to check our time because I don't want to bore everybody and we've got lots of slides to go through. Is the CEBA. The CEBA, you've all heard about those $40,000 loans that went up to $60,000 that the companies applied for, and the CEBA is basically done. But anybody who's gotten it now has to start repaying it. And one of the things is if they don't repay it on time, they don't get that $10,000 forgiveness, or if they didn't meet the proper eligibility. I know, I just shouldn't say I have a client because he's not now, but I know a guy who had 3 companies, got the $60,000 loan on each single one of them, didn't need it. He was not doing proper attestations, as they call it, for whether or not he qualified. And he put the money in a bank account and says, well, I can get the 10,000 free on each one. I said, well, you didn't use it properly. You're going to be probably one of the ones that gets audited right off the top. That means you have to pay the whole 60 back, plus penalties, plus interest. And if you can't pay it back on the time to get that 10,000 and you did qualify, they're going to give you 3 years loan at 5%, which is very nice for government. Because most of these companies that got those loans, I don't know if they're going to be able to pay it back. And I think the government knows that. So the next screen is COVID repayments. You have to repay your benefits if you were not eligible. So they're going to let you, normally the way the Tax Act is written, if you added something into income for an individual in 2019, you made a repayment in 2020, The income in 2019 would stay in 2019, the repayment would be in 2020. They're saying, no, you know what, that's not fair, and it's not. We're going to allow you, if you choose to deduct it in 2019, your repayment, or in 2020, or a split between the two. And they've done another nice thing. They said if you owed income in 2020 on your 2020 tax return, and your income is less than 75,000, you're automatically got interest relief on the 2020 taxes owing until April 30th, 2022. So they're not going to be keep charging you interest in 2020. Okay, we're going to get into very quickly the keeping records. Just remember, everybody who's self-employed, please keep proper records. Let's say a credit card statement is not a proper record. That with the actual receipt is a proper record. And then you can see what you bought, and you bought it through your Visa, right? Especially for people who are self-employed, you could have a whole bunch of stuff that goes through your credit card that are not business related. However, you can still do that with corporations, I guess. But you don't know what somebody really bought without the receipt there, and you don't know what the GST was. So scanning is good, but still keep your backup documentation. Keep proof of things paid by cash. So, and then you can always then enter this information into spreadsheets. As you know, we provide everybody with a spreadsheet that they would like to keep track of their expenses and their income. And there are apps out, well, there is accounting software out there. Simply Accounting, Wave, Fresh, all of these, and be really careful. If you really don't understand accounting, don't use them, because most of us now, this QuickBooks Online, I don't even want to review somebody else's stuff because it's so badly done. It's just really, give us the paperwork. We'll start from scratch because it'll cost you a lot less and it'll be done right. Okay. And if there's any questions along the way, I know we have to cram a lot into a short time. I'm trying to do this. Okay. Pardon me? There hasn't. Okay. So the next one is non-deductible expenses. We did a nice slide, which we do every presentation. Golf fees and cost of golfing is not deductible. Meals and snacks for personal use, unless you're on travel status. You can't deduct, like if you're working in town and you're going to a rehearsal, you can't deduct getting a sandwich and coffee at Timmy's. That you should have, which is, I know, and that doesn't sound fair, but you can't do it. And they're saying, well, you could have brought that from home. You could have packed your little brown bag and brought that from home, I guess. Now, if you go out of town, you can deduct any stuff like that because you can't get back home to eat, right? Work clothing and related cleaning, unless it's safety equipment or special wardrobe, gym memberships, protein drinks. I disagree with this. You probably all do. We should be staying fit, and the government should let us deduct that instead of prescriptions after we're not fit anymore, or or have a problem. So gym memberships are not deductible. Protein, plastic surgery unless for medical purposes, hair, makeup unless for promotional purposes such as business cards or videos and stuff like that. Okay, and the next one is what can I deduct? Tons of stuff. If it really, I make lists of stuff, but there's other stuff too that your unique business will have that's not on these lists. Just remember, if you had to incur it for business purposes, it's often deductible. If you're not sure, you can go to the CRA site and check it out, or you can Google it a lot of times. I love Google. Megan and I do Google a lot of things, especially medical expenses. Is this really deductible? And so there's insurance, there's cost of repairs, there's legal and accounting, union dues, commissions to agents, payments to helpers, makeup if required. Here it is for public appearances, photo shoots, videos, makeup and hair. If you paid someone to do it, you can deduct it, right? I won't get into just CDs because not everybody's a musician. You're all different artists out there, right? Then the next page is publicity, transportation, board and lodging, videotaping, EBKs, podcasts, what it costs to make. Sometimes you just do your own, right? So you can't deduct that cost. You have to have paid somebody. Cell phone expenses, meals and entertainment at 50%. Wardrobe used only for performance or safety clothes. Safety is very important too. Repair and alterations of cleaning of clothes used only for performance. Website design and maintenance, that's a huge one these days. Unless you're like Megan and can do it herself. Okay, the next one. Oh yeah, oh, you did that faster than I saw it go up. Way to go. Workspace and home, if we have time, we'll go more in depth into these. I'm a little concerned that I talked too much. Well, I guess we're supposed to cover mostly COVID, but benefits. Cost of music, cost of magazines, industry-related periodicals, vehicle expenses, and depreciation. When you depreciate assets, they're set up differently, and you get so much of the cost of that asset on a declining balance every year. So what's an asset? A car, a guitar, a pottery wheel, massage table. All these kind of things are actual assets if they cost more than $500. Meals, how are we doing, David, for our time here? Because I don't want to. I could wrap up this part in about 10 minutes, and then we can do all Q&As, hopefully, if that's okay.
I think you're doing fine. So
good.
I don't feel like you need to zip through more than you want to.
Okay, I just don't want to bore people, because it takes too, if we're in person, it's so much nicer because it's more fun, more interactive for everybody. Meals and entertainment, we just want to let you know right on the receipt who you were out with and why, right? Like business meal, Megan, business meal, lunch, we had a luncheon, that's a business meal. We had to discuss business. And once we put it into the tax software, we're only going to allow you 50% of that because the government said you had to eat anyways. You just chose to have your meeting, having a meal. Oh, and one of the things that's really important, meals. Am I boring anyone? Thank you so much, Tammy. That's awesome. That makes me feel good. When you go out to eat, just threw me off there a bit. So you go to eat, you add your food, you add your glass or 1 or 2 of wine, you add your tip, and you add the GST, and that is the 100% you put on, like when we give you our spreadsheets, that's 100% you put there. Then when we go to the tax software, we put 50%. And gift certificate for meals, if you happen to give them out to a client there and you want to deduct them, they're still deductible at 50%. Okay. Yeah, any type of meal gift or alcohol gift is still considered at 50%. Hockey tickets, 50%. I have a guy who's a realtor and he spends he did spend, things are different now, about 40 grand a year on hockey tickets, and he could only deduct 20. And I said, why do you want to do that? Why don't you put your name all over bus benches? You get 100% of that one. He said, no, it actually got him more business giving these special hockey tickets out to his clients. And they're pretty high-end clients. So I got one after telling him that. So business use at home, you can deduct a percentage based on your square footage of your office or the office area, the storage area that you have set aside specifically for business in your home. So you get to deduct heat, electricity, insurance, mortgage interest, rent, water, property taxes, security system. A lot of people, what's average for people in the arts? I'd say if you're using your workspace at home, your office in your home, you're looking at anywhere 10 to 15%. Sometimes it's bumped up to 20. If you have a studio or something, it can even get bumped up to 25%. All depends. As long as you can prove that square footage is for business purposes only. Okay. Now, the next one. Oh, there's my little red car. I love that part. I've always loved that. I never get tired of that little red car coming in there. Same with vehicle expenses. You're going to get a percentage based on business versus personal use. How do you keep track? Some type of mileage log. I write it in my day timer. Some people have apps, Track My Drive, just to show what your total mileage was and how much of that total mileage was business. And that's all we need to know to set up a percentage. And you deduct your license, maintenance and repairs, insurance, fuel costs, parking fees. That's what covers it, right? And if you lease, it's a whole different ball game, and the person doing your taxes needs that original lease agreement. And I prefer you didn't, because it's a pain to do that calculation. So, and you can deduct interest on money borrowed to buy a vehicle, but the vehicle itself is depreciated. You can't write it off all in 1 year. Okay, and that's the next screen is depreciation again. It's just saying for big purchases used in your business, you're going to write off a certain percentage each year, like vehicles are at 30%. Potty wheel and easel would be at 20%. So there's all different percentages. So, and that's for someone like me to figure out. You don't have to do it. And you don't have to claim it if you don't need it. Like if you're in a loss position in a year, you save it for when you have income, you know, in a profit year, so that you can reduce your profit. And okay, I need a quick drink here. And it's not got any alcohol. It's just from, it's just Tim Hortons watermelon strawberry drink. So, GST, just keep a mindset that GST, you can register for it any time, but you have to register once you hit that 30,000 threshold. And that's in 4 consecutive calendar quarters or 30,000 in a single calendar quarter. They would have to make it quite complicated because GST is very complicated, as we're all finding out. And once you're registered, what you do is you just separate that GST charged on your the income coming in, and separate the amount paid on expenses, and you do it on a separate GST return. If you're not registered, your GST you pay out stays in your expenses on your tax return. It's a little bit of a hard concept at first for people to get onto, but the way we've drawn up our spreadsheets, it really helps. So if you're needing one of our spreadsheets, just ask. I don't know if David still has them on the Edmonton Arts site, but if not, just you can send me off an email or call, and we'll send you one right away and explain to you how to use it. So, okay, this next one, it's really, I got way to it. So the next one is, all I want to say to you is that looks like a lot of information, and it is. I put way too much because this is brand new. The government basically says if you're doing anything, you're supplying any of your services. So I have clients on Twitch that are, I always found that kind of a funny name for it. So they're on Twitch, but anyways, so they're going through a US digital platform. The Canadian government has now said we're losing all this GST money on these US platforms because they didn't have to charge any GST. They have now made them charge on any sales or like subscriptions and donations going through Twitch that Canadians are doing. Right now, I have clients, they don't know who's purchasing or who's signing up on their sites. I have one girl on Twitch and another platform, and she makes a lot of money. None of it, like way over $100,000. And she isn't paying any GST. She still won't have to under these new rules. Twitch has to collect it and send it directly to the Canadian government. And we always thought, how is this going to happen? Well, it's all through the tax treaties. So this is stuff just to keep in mind if you ever wind up doing any of your services through a foreign, mostly it's US digital platform. And they're just trying to make it fair, because if you went through a Canadian platform, they'd be charging GST. If you go through US, they weren't. Now they're trying to even up the market. Put all that whole stuff. You can read it at your leisure. Okay, the next one. When do I need a business number? You only need it when you've got GST, payroll, or if you have corporate tax. Otherwise, your proprietorship is recognized by your social insurance number. And that's, and you can find out information on the CRA site, how to register for a business number if you're needing it. And the next slide is audit. Everybody's dreaded word, audit. Well, I don't like it either, because some of these auditors, I don't know where they got them from, but anyways, they're going to audit you to see if you really were eligible for a lot of the COVID-19 benefits. Those are going to be tough audits, really tough ones, because their criteria is so convoluted and they've changed it along the way. They audit GST returns, income tax returns, payroll, and other rebates, but don't forget, they're going to send you out a letter. They're not just going to phone you and try and audit you. They're going to send you a letter, and if you're signed up for my account or my business account, they'll go ding and say you got mail, and you go to the CRA site. Okay, work with your auditor. Most of them don't understand the arts businesses at all, where they're really not much different than any other business. You've just got a different type of expense. So if you don't agree with your auditor, you have the right to appeal. And we love sometimes dealing with them, but for the wage subsidy, I don't want to ever see one of those audits. It'll take forever. Okay, and the next one is just a list of some of the electronic services available through CRA. And there's tons of these Q&As for Canada Emergency Response Benefit Programs. And they are, we should put COVID benefits. I should change that, COVID benefits. Oh, well, next time. And they've got really good Q&As. Okay. And then that is the end of that. So hopefully we've been able to provide you with an overview, and hopefully you've got some questions. Does anybody have any questions or comments? Or I hope I didn't go too fast because it's a lot of information. The PowerPoint is available. David, can you make sure the PowerPoint's available if people want that for their notes? Oh. Oh. Okay, David's gonna email it once Megan emails it to him. And then again, too, we'll make sure on the PowerPoint that my contact information is on there, and you can get a hold of us with any questions, or if you get that dreaded audit letter, we'll give you a hand, or we'll tell you, oops, this is going to be tough. It won't be a 10-minute or 15-minute thing, and we'll approach that at that time. So do we have any questions today? And don't feel bad if you have a question. It takes Megan and I a long time ourselves to learn all this information.
While people gather their thoughts from the presentation, of course, if you have questions, you can either send them into the chat or just turn on your camera and microphone and ask that way. In the meantime, I will say we'll send out a copy of this presentation and a copy of the spreadsheet that Janis has spoken about, along with a link to the recording that we'll put on this on YouTube. And as well, I'll also send out a link to a 1-minute survey that we do after these workshops, just to get a sense of whether it was useful for you and what other topics you'd like to see. I think James has a question. I'll turn it over to him.
Yeah, hi. I saw there on the card briefly, but so for overseas, basically, so for music streaming platforms, Spotify, Apple Music, those kind of things. So, if I understand, so how has that basically? Is there something we need to do to make sure we're covered there? Like there was a thing that said, they're gonna take care of they're gonna start paying GST to the Canadian government for that. There's nothing we need to do.
Nothing. This is what's so nice about this. I was so concerned, James, that you would have to do something, or my other clients would have to do something. I thought this is going to get so complicated because we don't know where the income's coming from. Anybody on Spotify could be downloading your music, right? So now, but those platforms know where it's coming from, and that's why the responsibility has been put on them. And you don't have to sit back and do anything. What you're going to be doing is you're still going to be able to deduct the GST if you're registered that applies to any expenses to have gone on that platform that you needed, right? So it's going to get a little bit complicated because you can only claim certain ones that would apply there. You're going to be considered 0 rated. So you can give me a call afterwards and we'll go through a lot of that. 0 rated means you're not going to charge any GST on income on those platforms, but you're going to have to charge GST on all your other services if you're registered. If you're not registered, don't worry about any of this.
Yeah. I just claim that income. Like I've been claiming all that income this whole time anyway. Yeah, okay, that's good to know. I had maybe later on I'll hit you up. I had questions about US stuff, which kind of scares me, but we can say that for another time.
Yeah, please do. Just give me a call. You have my number, so you can give me a call, and we can discuss it. Or you can send me an email, and we can get started. So yeah, don't worry that Spotify will be taking care of the GST charged on the income. So
yeah, for sure.
Yes, and if they don't, CRA is going after them.
Yeah,
you don't have to worry about it. And they had to register with the Canadian government, and they've got 1 year to change their program so that they can charge GST. This is a huge expense for these US companies. So it's going to be rather interesting. So
Cool. Yeah, thanks.
you're welcome. Hope to talk soon. Okay.
Mhm.
We had, I saw a question pop up, Megan.
Oh, it's an Excel. It's an Excel spreadsheet.
What's the question?
She wants to know, is this spreadsheet a bookkeeping tool? Yes.
Oh. Oh, the spreadsheet. Yes, it is a type of bookkeeping tool. It just simplifies the ability for you to keep track of your expenses. We came up with the spreadsheet. It's our own way to help people who don't want to try to use QuickBooks Online or Wave or Fresh, but still want to keep track of all their income and expenses. And you need to. You can't just come with you could come here with a box of invoices, right? And say, here, do it. Well, that's going to cost you a lot. Where if you go and say, I'm going to empower myself and know what I can deduct and enter it into this spreadsheet, you're saving a lot of time and you're saving yourself a lot of money. And once you catch on, all of our clients love it. So basically, you have to know how to use an Excel spreadsheet. That's it. Did that answer your question, Geraldine?
Yeah, yes. Thank you. Yes, it did. I have I work in Excel. I have my own spreadsheet that I use, but I'm always open for, for learning new ways and improving what I have happening. So thank you.
Awesome. And the reason we send this to is it matches the fields in the tax software. So when you go to input it into the tax software, these are the only categories I have to work with. That's why we have a description area in ours. So you're going to say there's only one advertising, but you can have all different types of advertising. You put it in your description area so you know what you spent on magazines or what you spent on Facebook advertising and that. But for us, we have the one at the end of the day that all that advertising has to go on the software, one lump sum. But at least we'll have the detail if audited.
Thank you so much. Thank
You're
you.
welcome. Oh, we have another question. What is it, Megan? I can't see them. What am I supposed to do?
For an indie brand or individual artist that has not registered as a business yet, what would you recommend them doing at tax time in terms of what should be claimed, etc.? Or do they need to be registered in order to claim any of the music-related expenses?
Okay, I think we've got a question about when you're starting out, you're an indie, you have a proprietorship, you're new into business, do you have to register that business at all? No, you don't have to. You're going to treat yourself as a business. You're in this business trying to make a profit, and you have expenses that you had to incur to make that profit. So what you were going to do, you can go and register with registries because of the name. The name's important. Like when I had a proprietorship, I had one artist that I was managing. So I called myself JR Music. So I went to registries and registered my name, JR Music, as a proprietorship. And then I could go to the bank and open up a separate bank account under JR Music. But so that way, if people wrote a check to JR Music, which nobody writes checks anymore, a direct deposit to JR Music, I guess, it could go under that name or my name, Janis. It could go either. So you want to register sometime to save your name, nobody else can have it, and then be able to bank with that name. Otherwise, you don't have to register at all for a proprietorship. You just start keeping our spreadsheet. And if you want to know how to use it, like get more details, we'll give you a hand. That's part of what we do with new clients. We'll set you up on how to do it. Because that's what we're here to do. I really want to be able to help people get started in business and understand how it works. So you just have to keep track of your income and your expenses that apply to business. Oh, sorry, I haven't. Oh, what about a band with 4 members? You have different ways you can treat that band of 4 members. You can be a partnership, or you can be the owner proprietorship of this band. The venue pays you, you pay out your subcontractors, the guys you're hiring to play for you. It gets a little bit more complicated, so I'd really like it. Who am I talking to? I don't see the question. Kristen. Sorry, I don't know why I don't see the questions. I don't know what I've done here. That's why I have Megan here. She's my smart person on this stuff. So, and tax, by the way, she's doing exceptionally well. So Kristen, there are two ways to run it: a partnership, which gets very, very complicated, or you can run it as you're running the band and everybody else in that band is working for you. And that's the more simplistic way to do it. And then once you pay them after each gig, it's up to them to report their income and then whatever expenses they had to incur to show up on stage with you. Is that helpful? Or does you have more questions? Please give us a call. We can get more into discussing that. Like I said, you got free 15 minutes. Usually we go way over anyways, but okay, great. Thank you, Kristen. Any other questions? Oh. Oh.
This question isn't COVID specific. It's about the claimed percentage of your home that you use for your business and the future sale of that home. I know there is the capital gains exemption on the sale of your private home. How does the claimed business square footage affect the capital gains exemption?
Well, that's quite the question. Most people who have an office in the home, the percentage is supposed to affect your capital gains exemption, but often because you have enough of an exemption that overrides it's quite the complicated calculation, because you got to look at what you cost your home, what you sold it for, and how long it was your principal residence. And most people have enough time period in there would wipe out that 10%. One of the things you never, ever want to do, and this will really mess up whether or not you can claim that part as your principal residence, is you can't depreciate that office. So you can't depreciate, I can't depreciate my cupboards. I have old bird's eye maple in here that was very expensive. I got it at a very good price, but I can't depreciate that. I pretend, because it's staying with the house, it stays on the walls. I can't claim a portion of that. But I would like to look in further into your question. If you could send me an email, so I can give you a little bit better specific answer about the principal residence designation. Okay, I'd like to review that myself, tell you the truth. It's a very good question. Hey, Tammy, you'll be getting my email when we send this out, so I really would. I can't answer that as well as I'd like to. I'd like to do a little more research on it. Okay. You're welcome. So where's this showing up in the chats? Uh-huh. Oh, okay. Yeah, I will definitely, I'm going to take a look at that one. If you could save that question for us. I don't know if you can do that, Megan.
Oh, yeah, I can.
Yeah. I need to go through the calculation a bit better on that. Okay, do we have any more? Or is it time to tell jokes?
Oh.
That's it.
Thank you so much for this, Janice. I'd like to encourage everyone who feels comfortable in doing so to turn on your camera, turn on your microphone, and join me in expressing our gratitude to Janice for sharing her wisdom and her experience this evening. It really does help. And I know that nothing quite makes people clench up and get terrified like conversations about audits. So being able to demystify these and break them down so that we understand our obligations and the opportunities is immensely helpful. Janice, thank you so much.
Oh, well, thank you. We really enjoy doing these.
Thanks, Janice.
Thanks. We'll be talking again soon here.
Sure. We do have one more question that's come in. If someone is behind on their taxes, is there a best year to, is it best to start back and start to work your way forward, or to file the current year and work and then start to work backwards.
Okay, what we're doing lately. Oh, now we're getting that
Oh,
feedback.
it's me here.
Is that you? Oh, that was Megan. Sorry. What we've been doing to help people out, because if you apply for any COVID benefits, they want your current years. So you'll be doing the 2020 and 2019. I just had a fellow who's 7 years behind, and then, oh, it's more, yeah. Anyways, more than that, we got one 12 years behind. And don't feel bad, because people get behind and it's overwhelming. It really is. So for COVID purposes, we did the 2020 and 2019, and then we went to the 2012 and up. And the reason you do that is there's certain amounts that get carried forward, especially like with office in the home. If you didn't need it, it gets carried forward to the next year. Your depreciation schedule gets carried forward to the next year. So you really want to, only for COVID reasons, do a couple of the first 2 years, because they're going to demand it. And then we're going to go back to 2012. And if we have to adjust the 2019 and 2020 due to any carry forwards, we'll be able to. And so I would say get on it, because I'll tell you, this guy I just did for all these years, you should see the refunds he got. He had no idea how much money he had coming back from the government. And that doesn't mean everybody, but if you were a musician and you work somewhere else as an employee, and you're paying some taxes and you were losing money as a musician or an artist or anything like that, those losses reduce your total income. And they got back an amazing amount of money, and then also qualified for GST credits. They couldn't believe it. Like I thought, geez, I wish I hadn't filed all these years, but no, I would owe. So don't feel bad. We can give you a hand. And if you want just guidance and do it yourself, or help doing it, we do it all the time for people. But CRA, well, it's best to only go back 10 years. Don't worry about anything past that. Because if you have a refund, they won't give it to you. But if you owe, they will make you pay, and they'll charge you penalties and interest. So we go 10 years back, and that's it. And by the way, I love the scenery. I don't know how to pronounce your name properly. Can you turn your mic on and tell me?
Are you talking to me?
Yeah.
Oh, it's Lebohang Disele, but I usually just go by Lebo.
Lebo, okay.
Yeah.
It's beautiful scenery you've got going there too. So
Thank you.
got-
That's from Lake Louise.
it's nice. It's very nice. So yeah, just give us a call if you want some help getting caught up. Don't ever feel bad about it. It's really difficult. People just go, oh my God, I'm too overwhelmed. I'm gonna just, maybe it'll go away. Well, the sad part is it doesn't, and it might be to your benefit to do it. Okay.
Okay. Janice and Megan, thank you again so much. I think that's all the questions that we've got coming in tonight. We will look forward to talking to you again in the future, but this has been amazingly helpful.
Well, thank you.
Thank you, everyone. And we'll look forward to seeing you at other sessions in the future. Have a great evening.
We're looking forward to it. Thank you, David. Thank you, everyone, for attending.
Have a good night.
Good night.